Dobar dan. That means good day. TalkCast PDX. Find us on the web, talkcastpdx.com. It's Tuesday, always Tuesday for me, December 21st, 2021. Name of the show is The Bogdanich Perspective. I'm your host, Paul Bogdanich. Welcome. Episode 40 today. Title of the show is Anxiety. Before we get going, I would note that it is 10:07 or 10:01. I can't read without my glasses. Sorry. 10:01 on Tuesday the 21st. So that means 2 hours and 3 minutes ago, 7:58 a.m. Pacific time, was the winter solstice, which is where, the Earth is tilted 23.5 degrees, and it's the maximum tilt for people in the Northern Hemisphere. So it's the middle of summer, or it's the brightest day of the year down in Australia, Antarctica, Southern Hemisphere, and it's the darkest day of the year, the least sunshine in the Northern Hemisphere. It's also the longest day of the year for everybody on the planet. December 21st is when the rotation of the Earth, it's something like 138 milliseconds longer than any other day. But so longest day of the year for everybody on the planet, brightest day of the year for everybody in the Southern Hemisphere, and darkest day of the year for everybody in the Northern Hemisphere. And from here on out, it gets lighter in the Northern Hemisphere, and I hope that our situation generally follows that pattern and begins to lighten up. It's really hard right now to find accurate news sources because a lot of things just aren't being covered. This is supposed to be primarily a market-based show. I've been talking for stock market. I've been talking for a number of weeks about how it is sentiment-based, how the trading is, depends on how people feel that day. And that's especially true in between now and the end of the year. I do a lot of research on this, and I think I've have some insight into the different sentiments to look at and what drives people. I think a lot of them are in a state of anxiety, operating from a state of anxiety, as I said in the title here. But you can't really discuss those insights without running afoul of certain prohibitions on certain social media platforms. I use a studio, TalkCast PDX, and it's bundled. All the accounts are under their name, TalkCast PDX. And they have some great shows. The Hotline, which is a bunch of local chefs. The Old Stonies. This is Oregon, right? So if you want any information on marijuana and its derivatives, this is talk to the experts. And the women, Was That an Orgy is the name of the show. They're, I don't know what their stage personas are like, but they're just nice women. A little older, a little more experienced, still very attractive, and just much better than listening to like some 20-year-old or something. They're not struggling with their sexuality. But the point of the matter is, if I say anything that runs afoul of these restrictions, I get all them canceled. I already did it once. This is episode 40. My episode 33 got taken down by one of the platforms, and it caused a week-long suspension. And so what we're going to do is I'm going to do an abbreviated market-based show here, and this will be broadcast, through the thing. And then I'm going to put one just up on TalkCast PDX only. that gets into the details of why I think what I do. In sum, a lot of people are operating under a state of anxiety. There's a lot of things in the world to be anxious about. People have different reactions to how they handle anxiety. For a lot of people, what they want is the anxiety to stop, and they'll do whatever it takes to get them out of that anxious condition. And that extends into the stock market. And I think it's affecting the trading for reasons that like I said, the podcast. But Justin, if you could please put up graph number 3, and I'll discuss the reasoning in the separate show on TalkCast PDX. Yes, please. Number 3. Not number 1 nor number 2, but number 3. Okay, this is just our same graph, S&P 500. This one runs from June 30th through Monday, December 20th, which was yesterday. As of yesterday, market closed down, I don't remember how many points, but it closed at 45.68. This graph goes from, like I say, June 30th, summer of last year. And during the summer of last year, or the spring of last year, I guess, they were keeping it solidly in that channel. And that's the Federal Reserve pandemic stimulus and, helping the economy along. It broke out of it hit an interim high on September 2nd, and then it started to fall a little bit, hit a low on October 4th, came back up into the channel, was in the channel just fine, hugging the bottom of the channel more or less. And then where it broke the channel down again, that was the day after Thanksgiving, Black Friday, and that was on that Omicron announcement. And then it went down, then it went up, then it went down 2 days, and that was on Chairman Powell's talking about interest rates tightening and tapering. Then it went up, then it went down, then it went up big 3 days in a row, and it almost recovered the channel. Then it went down, then it went up, and then it hit an all-time high on December 10th, so 10 days ago. And then it got choppy again, and that all-time high was 47.12, and we're down to 45.68. We broken the 50-day moving average down. That happened yesterday, where it crosses that green line. The number of points in between where we were as of the close yesterday and the 100 DMA was only 46 points. So if it falls another 46 points, we going to touch the 100 DMA. The place where the Federal Reserve blatantly supported the market when it had that fall in September principally, but in between September and October 4th, where they blatantly supported the market was whatever it was, 43.60, 43.50, 43.60, yeah. And that happens to coincide exactly with the current 200 DMA, which is daily moving average. I'm going to tell you that 4360, 4350, like that, is the absolute downside. You'll get Federal Reserve action, barring some kind of really serious news, from somewhere or another. But I mean, barring some quantifiable problem, that's the floor. All right, now, does it go down or up? It's almost Christmas, right? It's the 21st. It's the solstice today. So does it go down or up in between now and the end of the year? You can take the graph down, Justin. Thank you. A lot of different thinking on it. I mentioned last week, and I'll reiterate it here. It is in everybody's financial interest, to see that market come back up to 4,700 at least. 4,800 would be better, or 4,900 better still. But at least 4,700 or so, 4,650 if it have problems, but up from here by the end of the year. It's in everybody's interest. If you're a fund manager and you get measured on the quarter end dates, and if you can close the quarter end in the year at a higher level, your salary goes up, your bonuses go up. When you put together your brochure for your annual year over year returns and how you're beating the market and so on, that goes up. If you're a manager of a state pension system, you get to go in front of the legislature and beat your chest about what a great guy you are and how much better shape the retirement system is in this year than last. If you're a retail broker, your clients are happier, have more money for Christmas, all the rest of this stuff. If you're a self-directed investor, your portfolio's doing better, right? So everybody, and I mean everybody, has an interest in this market moving back up to, call it 40, somewhere in between 46 and 40, 4650, 4700 by the end of the year. Very high probability, in my view, that that's what is going to happen. The only thing that would stop it from happening, barring, some kind of, I don't even know what you'd call it anymore. Realistic, in other words, just something like, barring some objective, realistic development, is anxiety amongst principally retail holders or small fund managers that think that the market is going to, is overvalued, or think that Omicron is going to kill everybody in the world, or just some state of anxiety. And that's what's been happening. Like I said, we had as of yesterday, we had 3 down days in a row. I don't even see the last time that happened on this graph. Maybe back here in July of 2021. It's been choppy, but I don't see 3 down days in a row. That big drop on the Monday after Thanksgiving, whatever that would be, December 1st or something, that was only 2 days. The diminution back there, call it September 15th, May, I think that's only 2 days because I think that covers a weekend. So I don't even see 3 down days other than the last 3 on that graph. What to do? I remember I was working in 2008, 2007, 2008, or 2008, 2009. I can't remember exactly. But I was working in close association with a company, and I had stock options. And my exercise price was about $9. And then they started to float up about above $11, $12 by the end of the year. And I remember thinking that the market is getting really buoyant, for the December 31st, because everybody wanted to close books up. So I called my broker and I said, hey, I want to sell some of these stocks options. And I hadn't done that before. This was some years ago. And he reminded me that before I could sell, I had to, the brokerage house had to verify that I had the options, that they were issuable. In other words, if they sold the stock, that the company would deliver them. That process took till January 7th or something. And in between December 31st and January 7th, the particular stock at option fell from $15.36 to $7.02. And then we headed into the financial crisis later that year. I think that there's a non-material, a material probability that the market, next year's an election year, okay? August, September, October, the market has to be doing well. All the incumbents, going to be, asking the Federal Reserve to do whatever. So if the market comes down, it'll be in the early part of the year, because the Fed will consciously reflate it in the summer going into the election, or they'll be under tremendous pressure to do so. Let me put it that way. We're all small retail investors here. None of us are BlackRock or Vanguard or anything like that. And the sale of 1,000 shares of this or a couple of hundred shares of that makes no difference, right? Our volume, unless we act in the millions, is not going to affect this market. But I'm exceptionally conservative, as you know. I don't particularly suffer from anxiety, but I do suffer from experience. Like I mentioned, that one stock that went from 1536 to whatever it was, 702, on me in the first 2 days of the year. If I was, I would be more comfortable waiting for this market to go back up, liquidating everything or nearly everything, and then just wait, see how it opens the first of the year. I think the probability is strongly in favor of it not soaring starting in January. I think the much higher probability is that it is weak. But I think that there's systemic interest in between now and the end of the year that, 60, whatever it is, 4650, 4700. And we'll see. Some banks agree with me, some banks don't. When you talk to the financial analysts at the banks. If we look at just what happened last week in the market, what did we do? Down 91 points, which is 1.94%. And so if you have a $100,000 portfolio, you should have lost $1,900. I've been talking for God knows how long, 40 weeks probably, on how this market is concentrated in the largest stocks. And if we put together demonstration portfolios that have nothing but the top 30 stocks by capitalization in them, one's market weighted, one's equal weighted, and the market weight portfolio, instead of going down $1,900, fell $3,500, and the equal weighted of the same 30 stocks, instead of falling $1,900, fell $2,600. Those, as you'll remember, are concentrated in between certain sectors. And if we just go by 11 sectors, 3 stocks per sector, in other words, a broader swath of the S&P, that portfolio, instead of falling $1,900, only fell $1,500. My portfolio, I only have eight stocks anymore, so I only have 20,000 invested instead of 100. But on my 20,000, it dropped $331. I'm also fully hedged. If the market fell in the first part of January, that would suit me just fine. But I had 300. The hedges returned 362, so I made $30 on the week. Big whoop. But I can't suffer if it falls. If you look at the sectors, just to see what they did over the week, those are all. Where are we? Well, I don't immediately say. There they are. For the week, communication services down 1.7%. Consumer discretionary down 5.7%. Consumer staples up 0.8%. Energy down 5.25%. Finance down 0.5%. Healthcare up 1.9%. Industrials down 2.9%. Internet technology down 3.9%. Materials up 0.4% or down 0.4%. Real estate up 2.5%. And the utilities up 1.6%. And that's how the market broke out. Safety, real estate and utilities, big dividend payers. If you believe in real estate, conservative balance sheets, healthcare, the only people making money off this anxiety. And those are the stocks that are up. Everything else is down. If we look at if all 4 of those portfolios, there's 54 stocks. And if we look at them, we had 5 stocks up more than 3%. The biggest gainer during the week was Pfizer, up 12.7% on that pill, the approval of that treatment pill that they came out with. Right behind them was Verizon. Communications company, pay a dividend, but pretty good results. The subscribers didn't fall as much as expected. So they were up 5.9%. Crown Castle, one of the real estate concerns, up 4.2%. AT&T, just like Verizon, communication services, up 4.1%. Philip Morris, up 3.8%. For stocks up above 2% but less than 3%, notable names in there: Costco, Cisco, Abbott Labs. For stocks up more than 1% but less than 2%, Berkshire Hathaway, Johnson & Johnson, Facebook, Meta, I guess you'd call it now, Procter & Gamble. But those are the only notables in there. Stocks that were up but up less than 1%, Broadcom and Intel are the only ones, notable names in there. Stocks down, but down less than 1%, 3 of them. 2 notable names, MasterCard and Visa, similar concerns. Credit card clearing dropped a little bit, less than 1%. For stocks that dropped more than 1%, but less than 2%, there were 9 of those. And UPS, PayPal, Amazon, 3M, Bank of America, Walmart, Sherwin-Williams, JP Morgan. 3 stocks that fell more than 2%, but less than 3%, Honeywell, Disney. That's it, of the notable names. 6 stocks that fell more than 4%, but less than 5%. Chevron, Netflix, Google, Nike, Apple, Exxon. 6 stocks that fell more than 5%, but less than 7%. And that was Lowe's and Microsoft and Bank of America, Boeing Aircraft, and Target and Home Depot and ConocoPhillips, with ConocoPhillips falling 6.6%, Lowe's falling 5%, 5.1%. Microsoft fell 5.5%. Target fell 6.25%. And then you had 3 stocks that really took a dive, down more than 7%. NVIDIA, principally profit-taking. NVIDIA last week was up 107% since April. Now it's only up 93%, but it fell 8% last week. Tesla fell 8% last week. In a week. But anyway, no news, just Elon Musk selling more stock, huh? And then Adobe Systems fell 15%. Adobe does a 28-week quarter instead of a calendar quarter, and they released earnings. This is interesting. Now, remember, this is for a week, mind you, okay? Their stock was down 14.95 cents. And it fell from $654.45 to $556.64. So whatever that is, $190. All right, so it fell $90 on a $500 stock, about 15%, 14.95%. It did so on the earnings, right? What's so terrible about their earnings to cause the stock to fall 15%? They released their 2022 expectations on their conference call. The expectations for the analysts were $18.2 billion in revenue. This is for all of next year. And $14.26 in earnings per share. The company guided and said, 18.2 is the analyst expectation. They came in on 17.9 for revenue, but EPS, instead of 14.26, they said 13.70, right? All right, so the EPS number was 4% below the analyst expectation, and the revenue number was only 1.6% below the expectation number, and that was enough they didn't say business was going to be bad. They said this is a conservative forecast. We may beat it, blah, 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 but this is our 2022 guidance. And on that statement alone, stock fell 15% in a week. So that's the other point that I would make. I've been saying this for weeks now. These moves in these high capitalization stocks, there's no small stocks in here. These are all mostly the top 30, up 12%, up 6%, down 15%, down 8%, down 8%, down 6%, down 6% in a week. So it's there's no stability, no surety. It's trading on sentiment and anxiety, which will be the subject of the talk. How to think about that, but I can't do it through these channels. And that's it for this time. It's been the Bogdanich Perspective, December 21st, the solstice. This is interesting. Sretan Božić. Yeah? That means Merry Christmas in Croatian. If you speak Croatian or Serbian or Slovenian or anything like that, and you listen to me say Sretan, you can tell that I'm that Croatian is not my first language. I can't do it. Proper pronunciation is the S, and then R, Sre. But I somehow can't put that together. And it reminds me, I guess, of my grandfather when he used to speak English. He came over when he was in his mid-20s, spoke good English, but you could tell that it wasn't his first language. Grandmother, who came over when she was 10, very seldom, unless she got mad at you, then she'd revert to her primary language. Anyway, Sretan Božić, that means Merry Christmas. And do another show for TalkCast PDX only, and see you next week. And hopefully that market will be next week's after Christmas, so 46.50 maybe, something, or on its way to there. Anyway, thank you.